let's start at the origination of the piano story.
No. Well, RJ, I was born as an extremely young child. And uh
You were
and
born as a
piano,
baby. Yeah.
yeah. So I mean, I was really coming fresh to it then. So I had had a long background in the agency business, running digital agency businesses, and then sold a company I had started to WPP in 2007, and then ran a conglomerative network of agencies for them for a bit, and wanted to get back into entrepreneurship. And the biggest, you look around at all the ideas you've had and that are exist in the world when you're coming to that. And I thought the biggest problem on the internet is the business model for journalistic content,
Mm.
right? That um, even then, and we're talking about uh, 2012. It wasn't really clear how people could make money in a sustainable way from articles, right? And yet the article economy is enormous. The fourth estate is a critical part of democracy, and always under threat. So I thought, if we could figure this out on the internet, that would be a way to build a great company and a way to improve the environment at the same time. And so we had this idea to that we tried to incubate for a while within WPP, and that wasn't successful for a variety of reasons. That consumers would sort of fill up a wallet of money and then pay as they go and consume content around the web. And we tried to sell publishers on that, and publishers basically said, look, we have a lot of technical challenges and a lot of business model problems, but we don't really need a new widget or a new business model. We're focused on fundamental things of identity, being able to charge money for stuff, um, running our website experiences properly, matching up a subscriber across channels, being able to provide them with customer care, like really fundamental blocking and tackling. And so it became clear to me that for any new business model to work, the media business really needed to be replumbed to an extent because all these publishing companies and video companies as well were coming to a direct-to-consumer world for the first time, effectively. They all had big IT departments. They were all having to cobble together a lot of point solutions to deliver what they needed. And so I thought there's a real market here to be an arms dealer for the media business and an ally to them as they try and be technically sophisticated in a world dominated by platforms.
Hmm.
And so we created Tinypass and then eventually what became known as Piano in order to address all those software needs that the media business has. And of course, the business has become more diverse over time, but that was the genesis of it. And we started as three or four people in a really dingy little room above where the old Nobu was on Franklin Street in Tribeca, New York. And just kept chopping at that tree. And so now it's a, 560 person global business and serves most of the world's major publishers and a lot of medium and small ones too, I'm proud to say, and has been steadily diversifying into other industries like banking and financial services and airlines and retail.
Hmm. And so it seems like you have a platform or portfolio of features that you can extend to your clients. Is there one key one that most all of them use?
So really the way I think about the software or SaaS challenge, I mean, is basically it's got data at the core and you build applications on top of that.
Mhm.
So the magic of Piano is that it's both a real-time kind of in-memory DMP database, so we can segment people and make decisions between you looking at one page view and clicking and looking at the next, so that we're targeting the right advertising to you or telling you, hey, stop, you now need to pay us, or targeting or customizing specific content or messaging to you. And then a real kind of work for a powerhouse kind of workhorse analytics function where we're taking every single behavioral event we can capture. And I mean, not just like you clicked on a web page and you were on an iPad and it was 7 p.m. in San Francisco, but you played or paused this video, it buffered for this many seconds, you made it this far the way through. Here's the revenue level and size and creative ID of every ad you saw on the page. Here is a natural language scan of the content that you read and what that was about and the sentiment analysis there. So tons and tons of data that we then use to say, how do we make the most money out of this user at this moment?
Hmm.
And so
Does your
the fundamental asset is that data function in the middle and being able to benchmark that across clients. And the other stuff is just personalization or analytics or messaging built on top of that core.
I'm wondering if you have discretionary, a tool to enable your clients to charge discretionary pricing based on the value of the eyeballs looking at the content. I saw something on your site, and it's not directly related to what I'm talking about, but like engagement is extremely valuable. It's and if you can get a user to truly, in this age era of voluminous content everywhere they look, but if you can truly get someone to engage, that's much higher value. So your CPM rate should be, multiple times what the average CPM is. But then I guess on top of that, if you have data on the user, you could even scale the pricing of for that particular person. Is there anything like that out there?
Well, that's exactly. I mean, let me just kind of take what you said, which is exactly right directionally, and just put more detail around it. So I mean, what we do for every single user. So, I have a cookie on pretty much, if I go to a conference, I say, I bet I have a cookie on every device in this room because you guys read articles, right? And so we are making machine learning driven propensity score decisions on every single user when they go to every single site saying, is this person likely to register? Are they likely to return to the site? If they're a subscriber, are they likely to churn? Are they likely to subscribe in the first place? And on that basis, that's when we will decide to say, look, RJ's been here a lot. He's read a lot of articles that are, sort of special interest and valuable. He comes with this cadence. We think there's a zero point 0.7 chance that he's ready to subscribe, and therefore we're going to pop up in a box and say, hey, you should pay us. And that pricing, maybe not the exact amount will be dependent on your segment, right? But it might be based on your geography or device, or it might be just that we present you with offers that we think are relevant to you.
Mm.
So we might say, hey, look, RJ might buy a 2-year subscription, or we might need to show him this promotion in order to get him to purchase. And that I think is stretching to other industries where, we like to say in aviation, if I present you with an offer for travel insurance 19 times and you say no 19 times, if I present you with that same offer the same way the 20th time, it's got a really low chance of success, right? There's absolutely no reason you can't say, I'm going to present it a different way, maybe with video content that says on your route, people are frequently disrupted and 780 people have used travel insurance to protect themselves, or here's a video about why that's important. Or I might say, instead of showing him that, he's going to Brazil for 3 months, I'm going to talk to him about bringing his pet on board, or I'm going to, so there are all kinds of where he's clearly going on a business trip. I'm going to try and sell him airport transfer or Wi-Fi or priority boarding. So there's all kinds of personalization in the offers that you can get without necessarily saying, I'm going to offer one price to one person and a different price to another person.
I see. You mentioned financial services. I can imagine this gets really interesting because that's just such a massive market. Whether you're talking about, I mean, insurance, I feel like has boatloads to spend on marketing and these tools. Can you give us some examples of maybe the financial services space?
Absolutely. So, I mean, the challenge, the greatest advantage of the web is also its greatest challenge from a commercial perspective, which is it's stateless and anonymous, right? I mean, you can go anywhere without the site really knowing who you are, right? So we try and pick up on subtle signals to create a segmentation model. And so in the financial services industry, that's really about what stage of life you're in, right? So the
Mm,
bank can make certain determinations that they can blindly share up to us, right? But also there's content you look at, there's behaviors you manifest through which we can try and guess what your general age is or what you're most interested in. Because if you are somebody who's thinking about a mortgage or thinking about a credit card, those are very different products, very different messaging. And if you've ever worked with a bank, a bank has lots of competing groups that are all kind of in effect vying for, I was going to say fighting for, but let's just say, you know, trying to use homepage real estate and whatever messaging opportunities they have to say, are you at the point where you want to start saving for retirement? Would private banking be relevant to you? And so that segmentation and life stage analysis is critical for them in presenting you with a relevant offer at the right time, right?
mhm,
So it is hard to just guess what age somebody is or where they are in their life based on how they click around, but you can get better and better at that over time.
mhm. I'd like to switch over to like more of the company itself. And you've scaled obviously through, organically and through acquisition. Can you give us, I guess you mentioned you're up to like 500 um, or so employees. You've raised a lot of capital. Um, are there other metrics you can give us for the sense of to give us a sense of the stage of the company? You don't have to mention other whatever you're not
Okay, it's
comfortable.
approximately $100 million business, I can tell you that. And we've been doing it for about 12 years. And we're really proud of our profitability level and proud of the longevity of the business. I think the the journey for us, the M&A journey for us was really great and also scary. And I'll talk about that. So, we when we were after we took on private equity money in 2019, it wasn't long before we saw a company that we really admired. I mentioned one of our core assets was this real-time database, right? And that was a product of a company called cSense, strangely enough, CXENSE, that was a Norwegian company that had gone public. And they'd had all kinds of trials and tribulations in the life of the company, and they were facing rough straits. Like they were running out of cash, stock price was low, and they had it was just they were struggling to retain staff. It was a bad story, but they had some great people, some incredible clients, and this great technology. And we saw that and thought we can really make something out of that. And we approached our PE investors, Updata, in DC, who've been terrific Updata partners, and said, "Hey, we've got this opportunity," and then proceeded to do a really complicated and protracted, but in the end successful public to private transaction to buy the company. And what we integrated them, or we brought their customers on, brought their staff on. The overall ACV of the company increased because we could sell more. And it was just a really successful story. And so we started looking at the world and we said, okay, well, if we can buy companies like that for roughly 2x revenue, and we think we traded a higher multiple, and we're in a zero interest rate world, so it's not a big drain on monthly cash,
Mhm.
maybe we can repeat this playbook a few times and, make more accretive acquisitions. We did that three more times. We bought a company from Axel Springer called Solera One. We bought, which was a direct competitor in Germany. We bought a really incredible French analytics business called AT Internet in Bordeaux. And we bought a business called Social Flow in New York, which was an organic social media business for publishers. And that built and rounded out the stack that we have now. I think it was difficult for us when interest rates became non-zero and went up by 550 basis points over the course of a little more than a year. And so that drove a lot of push towards profitability and being cash flow positive. But we weathered that storm, and the company is now a lot stronger for it.
And is that the debt financings that you were taking on from Sixth Street?
That's exactly right. Yeah,
Yeah, Update is great, by the way. We know them fairly
totally.
well. Um, yeah, I thought that was it was super interesting, the sequence of your capital raises, and so they're coinciding with these acquisitions. And then you just, I think, recently completed another round of financing.
Yeah, we refinanced the Sixth Street debt with debt from Runway
Yeah.
um, on Crosby Street, and they've also been fantastic, and that's been a really good move. We brought in an LP of Updata who provided a little equity, and we refinanced the debt with Runway, and that's put the business on a bit more stable footing.
One thing we do like to touch on is like how investors have helped, like aside from the financial capital and, thinking through capital structure, stuff like that. How has Updata provided value?
I mean, I would, if I had to use two words for them, I would say trusting and supportive.
Uh-huh.
I mean, they've really, backed a lot of our plays. And I think it's been a difficult, the SaaS market, let's face it, has become more challenging, right?
Yeah.
Valuations have been cut a lot. And so you need a more long-term view, right? And those guys have been patient, insulated us from any fund dynamics they might have had, and have really, backed us as we made those acquisitions, as we've done a lot of, restructuring and changes internally to orient towards growth, and frankly, taking a lot of risks. I mean, you look at a company like Piano, who started out saying, we're going to address the media business and this particular kind of charging for content problem. And the good news and the bad news with Piano is, and arrogance aside, we've kind of won that market. I mean, top five newspapers in Japan are all on Piano, South China Morning Post, Sydney Morning Herald, and that's Asia, and real prevalence in the doc market. In the UK, we have, incredible customers like the Telegraph, and, the US, you go down the Eastern Seaboard and it's Boston Globe, Philadelphia Inquirer, Wall Street Journal, Atlanta Journal-Constitution, and lots of great other companies like Hearst or America's Test Kitchen. I mean, it's just one really cool, and broadcasters like BBC Plus or CNN Plus, like really great subscription businesses. And so, the challenge for Piano is they're just not making a whole lot of more media subscription businesses,
Mm.
right? So there are still some great clients out there that we want to go get, but what we've been doing is diversifying our offering through analytics, right? Where we work with a lot of companies outside of media, again, banks and retail, most specifically, and then signing airlines on the activation, personalization side of our business, BFSI. So, it's been not a pivot because we've been staying with publishing, but it's been a market expansion. And back to Updated, they've really been terrific as we've been, looking out on the horizon and trying to grow the market and getting their support.
Hmm. And with AI, how have you been interacting with it? Has it been like a solution you offer to clients? Has it been something you leverage internally to make your processes more efficient?
Yeah, so, I mentioned we talked about these acquisitions, and we talked about the kind of things that we do for customers. And Piano is a very big platform, right? Where there's identity related stuff and transactions with subscription and personalization. Clients are integrating outside systems with Piano. They're tagging all their pages with Piano. And that creates a big support burden, right? Because it's support, it's training, it's documentation where clients have really said, like, I have this very specific question about how to get this done with the piano platform in my business. And we operate in many, many countries and pretty much every time zone in the world. And so for us, the support documentation and where was I? Support documentation, overall technical consulting part of the business was expensive to provide and slower than our customers needed. There was just no economic way to scale it up in the way we wanted. So for us, we were really early in AI-ification of our support documentation consulting function.
Hmm.
So we now have we built our own application, AI application based on ChatGPT that the first thing we did is build that consults all of our material, all of our product documentation, Confluence pages, every Zendesk ticket we have really goes deep on all that stuff to answer questions. So when a customer has a question now, they say, I want to open a ticket about this, and the AI agent helps create that ticket for them, but also says, well, I'm going to create that ticket for a human being, but here's how I would address this problem. Does that answer your question? Right.
Hmm.
And we
Hmm.
keep on loading more information into that and training it and also giving it more kind of agentic ability to take action on the customer's behalf. If they say, hey, why did this user get this email twice? Or why was this person not charged in February or whatever it is, the agent can research that for them. And that's been tremendously powerful. And that was the first thing we did. And the experience building that and working on that and launching it to clients was super valuable in terms of thinking about AI in the product.
Hmm.
So on the analytics side now, all the analysis comes automated from AI. So if you have a particular report, the AI is not just looking at that report and saying, it went from A down to B, and that's a 12% decrease. It's saying that could be because it's consulting many, many more reports, because we have these kind of groups of relevant data sets that the AI can look at. So that's tremendously powerful if you're running a subscription business or an online retail business where it can say, this conversion rate went up, but it might be because you changed this or you added this. And as we make that cross customer, it can say, I tend to see when people, change their graphical template to do this, it has a lift of 3%, right?
Hmm.
And that's super valuable, right? Or when you ask people to register, if you put in two steps, it decreases the registration rate by 5% or whatever those metrics are. And so our clients are really loving that AI data analysis. What we're trying to do more now is really automating the circulation process.
Hmm.
So our customers in media subscription are constantly coming up with more and more segments of audience, creating custom experiences for them to try to offer them things that are relevant and make more money out of each individual user. And that, unfortunately, from a labor perspective, is diminishing returns, right? The smaller you make the group, the smaller the yield will be off of that thing. But if AI does that, you can really maximize that revenue curve. And that's where we're focused next.